Good afternoon, ladies and gentlemen, and welcome to today's webinar, which is the fourth in a weekly series which B&H is providing, covering topics based upon the feedback received from members in our recent Business Resilience Survey. I'm Kevin O'Leary, General Manager of Business North Harbour, and I'm delighted to welcome you all today. Before we get into the webinar, just need to thank our wonderful sponsors. We've got our gold sponsors, North Shore Golf Club, Waste Management, Pathfinder Solutions, Driveline, Montpellier Law, Ramada Suites of Wyndham Albany, Spark Business Hub, Northern Business Hub Auckland, Mark Group, Dale Carnegie and Benefits. And we also have our silver sponsors, Phone Plus, Davenport Law and Turner Hopkins, and our excellent Women in Business sponsor, Eclipse Recruitment. So as ever, thank you to all our sponsors who do a terrific job for us. Today, we're looking at supply chain management. A large number of businesses from different sectors have identified issues with the supply chain for a long time, issues which don't appear to be showing any real signs of improvement. Delivery delays, ever-increasing shipping and demurrage costs, and the redirection of goods to other ports are some of the more common problems facing businesses that have been highlighted by our members. This week's guest speaker is Chris Edwards. Chris is the co-founder and group managing director of the Go Logistics Group, a company that he founded over 17 years ago. As a New Zealand-owned company, Go Logistics now operates offices within New Zealand, Australia and China. He is the president of CBAFF, otherwise known as the Customs Brokers and Freight Forwarders Federation of New Zealand, who advocate for the logistics industry, while also attempting to put a spotlight on the supply chain as a rewarding profession. We're delighted to have Chris with us to share his knowledge and discuss some of the challenges our members are currently facing. Before I hand over to Chris, just a quick word about the format of the session. Chris will talk about a number of topics for around 8 to 10 minutes, but you don't have to wait until the end of the session to ask questions. If you have a question, please put it in the Q&A. I'll let Chris know and he'll try and answer them as we go along. So without any further ado, delighted to hand over to Chris Edwards.
Thank you very much, Kevin. I put together some notes today about what's currently going on in the supply chain, but like a lot of these presentations, as soon as it's written, it's almost out of date. Things are changing so quickly and so fluidly. But what I've tried to do today is break down topics into short, medium, and long term as I see it in the industry, across our members, and more importantly, across our members' clients. I'm hoping this is news you can use. It's probably more in depth than some of you may want, but again, I just hope it gives you some background into what I think is going to happen over the next 12 months and beyond. I think most of us are probably sick of the term supply chain, but you ignore it at your peril. I think it's going to be the most relevant topic again for the next 12 months in New Zealand. And I've made this presentation a bit more import-centric rather than export-centric, because I think most of the members here are probably more net importers and exporters. Let's look at the short term. I think the question we must ask ourselves at the moment, has anything got better since last year? My answer to that would be no. It seems to me things have got worse in many areas, and I believe we're probably entering our peak disruption period for the supply chain in relation to New Zealand, and that's specifically around the sea freight supply chain. Let's run through the menu of some of these issues. We've got problems with pricing. Most of us are yet to see any meaningful relief in this area, and the current high fuel cost is not helping the situation. This week and last week, we saw a number of airlines increase their rates to and from New Zealand, and shipping lines also announced increases from Australia to New Zealand as well. We're lucky with the high New Zealand dollar. I think that's insulating us against some other price pressures, but if you're an exporter, you're less happy with that situation, I'm guessing. We clearly have some geopolitical issues. The war in the Ukraine is something we are all aware of, but I'd also add to that China's zero tolerance to COVID and the disruption that is currently causing. We're aware of Shanghai being shut down. That looks like it's going to be extended. And that not only hinders ports and airports, but it also hinders suppliers and lead times for orders and those sorts of things. And until we see a change in that policy, I think that will remain a current issue. For many people listening today, and my own clients as well, scheduling for ocean freight remains a poorly performing part of the supply chain. Whether you're trying to book a container from the USA or Europe to New Zealand, or even outbound to Asia, the reliability of the service remains exceptionally low, while perversely the price is continuing to increase. We still have the obvious issue of demand outstripping supply. Hence, getting space on aircraft and vessels still remains a problem even when they do stay on schedule. It will be interesting to watch the number of airlines who announce their return to New Zealand, as that will certainly help in the medium term, and I'll discuss that a little bit later on today. We shouldn't forget New Zealand government policy. Whether it's been the slowest to open New Zealand to travel, in my opinion, policies surrounding isolation for workers in the supply chain, and also, in my view, an unhelpful approach to immigration for what are incorrectly called unskilled workers, the New Zealand government continues to be heavily involved in the supply chain problems, whether it realises it or not. For example, having only one person in a container unloading it with the COVID restrictions obviously slows down efficiencies and movement of goods, as does the lowering of speed limits on roads around the country, and a lot of things that we might not consider directly affecting supply chain. And finally, perhaps very topically, is the ports of Auckland. And whether we like it or not, fixing the ports of Auckland has not yet happened to the degree it should have done, and it still sees vessels diverting to Northport and other ports around New Zealand, and generally undermining confidence in the Auckland portability. That also has a flow-on effect throughout New Zealand, and if you're doing exporting from the South Island as we are, you are still affected by what's going on at the ports of Auckland. There are, of course, other issues, as I said, at my desk this week, but these are the ones I feel we're dealing with in the main. I guess I'll see some questions perhaps about others if I've missed some. Let's turn our attention to the medium term. That's 12 months and beyond. And here I do see some good news and some green shoots of some changes coming. We'll start with the easiest topic, which is air freight. And that seems to me the most likely to rebound first. Opening the borders should see more flights to and from New Zealand, and it presumes that our image in the world is strong enough to attract the tourists back to this country. More tourists mean more air freight capacity in and out, and that is surely good news. And some good news this week, for example, was Air Tahiti Nui announcing 2 more flights from Los Angeles to New Zealand, which again should see capacity increase and rates start to come down. I should also point out the government has been helpful in this area with a thing called the MIAC scheme, which has supported air cargo capacity into New Zealand, and that is still in play for another 12 months until the end of March. Although I'm concerned what message that might be sending to the market about our speed of recovery in the air freight market. Sea freight. Provided competitive pressures are allowed to play out, I do see capacity growing in the New Zealand market by the end of the year, or certainly by the first quarter of next year. Independent shipping lines continue to receive strong support from the SME sector, and by the end of the year, I'd expect to see some new vessels and some new space deployed here. This may be a flow-on effect of slowing down in other markets, meaning there are also more vessels available to be deployed in Oceania. Ports of Auckland in the medium term. I have met with Roger Gray. He's the new CEO of the port, and he comes with a strong reputation based on the work he did at Lyttelton Port. Having met with Roger and discussed the issues, their main issue is labour. And despite their trying to recruit new people and get new crane drivers, it still hasn't happened to the degree that it's needed. And the reality is, while it will be better by the end of the year, it certainly won't be fixed by the end of the year, nor will automation be completed, I suspect, by the end of the year. So in reality, we'll still have the ports in play in the medium and therefore the longer term. Something else in the medium term I think will be important is inflation. Already we've seen anecdotal evidence of a slowing in import demand this quarter, and having spoken to both MPI and Customs, their own import workbenches are the quietest they've seen in the past 3 years. Some of that will be around vessel bunching, but it seems to be inflation is now having an effect on demand. Perversely, this may have a positive effect on the supply chain, particularly for sea freight, because reduced demand in the past used to see more capacity, a dropping in freight rates, and an easier supply chain. However, I suspect that would be different this time for a reason I'll discuss in the long term. But something else we've learned in this period of disruption is that scale matters in the supply chain. And companies at the big end of town have been able to make decisions directly with shipping lines at the exclusion, in my opinion, of the SME sector. And some have also made decisions around chartering and moving their products to and from market. Shipping lines themselves have been a part of that problem, preferring, in my view, to focus on blue chip clients and larger volume, and again, ignoring the SME sector, of which I would imagine most of the membership listening today would be in. In the coming 12 months, we'll know whether that strategy from the lines is helpful or unhelpful to the whole of New Zealand Inc. And I know the government is interested in this as well, based on some discussions I've been having with government. And speaking of government, I should also mention the Commerce Commission. Now, some of you might be aware that we have joined Australia, Canada, the UK, and the USA in an investigation into the current practices in the supply chain. And that's namely around the shipping lines, in my view, possible cartel behavior, and the fact that competition tensions in shipping don't seem to function as they do in other segments of our economy. I personally think this investigation is likely to see some change in legislation in this area, though perhaps I'm too optimistic to think that will be in the medium term. It may well be in the longer term. But certainly, if you read the press out of the USA and the Department of Justice, there is a sense of urgency in examining the practices that have led to extreme profit for shipping companies, but extreme problems for importers and exporters. I also feel personally that the next two budgets and indeed the election next year will be important in the supply chain. Given what I've said about government policy and the campaign to look at what's happening to New Zealand Inc., the government have made some moves, such as allocating 30 million to coastal shipping over the next 3 years, but they've not done other steps I think they could be doing in the supply chain. I think we'll see a growing call of labour to come into New Zealand, and maybe even the discussion about a New Zealand-owned shipping line sometime in the next 12 months. It's whether that actually happens or not is another question. So finally, I wanted to look at a few things in the long term, and by the long term, I'm talking 2, 3, 4, 5 years out. It's where I get to do a bit of crystal ball gazing and probably get a bit more latitude than other topics I've discussed today. Hence, it's a bit more an op-ed piece. It may not come true. It's just my opinion. I think the first question I wanted to ask people listening today is, have we seen the death of the just-in-time supply chain? At the moment, yes, but I don't think so. I think what we might have seen is the beginning of more local fulfillment centres for importers, and maybe the more beginning of overseas manufacturing for exporters to get to market. At the start of this crisis, there was a suggestion that we'd see more local supply chains and manufacturing. I don't think that's true. I think what we have seen is a rise in ordering of more stock, a buffer and suffer mentality, and a shortage of space in warehousing and those sorts of things. But that not only puts pressure on the balance sheets for some clients, but it also needs physical assets to store product itself. And as you've seen with occupancy and warehouse construction, it's booming around the country. I do suspect when schedules become more reliable in around 18 months, that just-in-time supply chain begins to return for some people for the very reason it was popular in the first place, for certain size businesses. What about container shipping? Will it once again become the cheap way to move cargo around the world? After all, that is the main reason it has been so successful over the past 50 years. I suspect the 9 main shipping lines will do all in their power to stop a return to the bad old days when a rate of return meant shipping was a poor investment. Indeed, they continue to raise rates in many trade lanes, but I don't think the current price exploitation, and that's my own view, can last indefinitely either. And I do think a mix of government action, regulation, and perhaps a slowing in demand will see better outcomes for importers in the next 18 to 24 months. Also, providing a peace deal can be done in the Ukraine quickly, I would expect to see fuel pricing drop and therefore affect the freight rates at the same time, maybe Q3, Q4 this financial year. My final question is, will we see a New Zealand flagged coastal shipping industry? I think we will. I think that $30 million grant that's been put out on GETS, while not a lot of money compared to the $8 billion that KiwiRail has received over the past 5 years, does signal indication from the government to look at regional New Zealand and the port policy, and maybe even think further afield to a hub and spoke model that both serves New Zealand, perhaps Australia, and then the wider world. The Australian government's talking about an Australian flag shipping line. They've got more power and more volume. That may come to fruition. I haven't heard the same conversation about an international shipping line in New Zealand that's New Zealand owned, but it may be something that's on the cards for the medium term, depending who's in government and who looks at port policy and supply around New Zealand. So in conclusion, that's some of the topics that I'm asked about a lot as I travel around the country talking about supply chain with various members and their clients. I hope it's been useful to you, and I look forward to answering any questions you might have later on.
Thanks, Chris. One of the questions that we actually got in prior to the webinar, just as people are taking time, if there are other questions now based on what you've just spoken about. One of them, it appears from what you're saying that most businesses, there's not really a lot they can do to affect these problems. Would that be the case, or is there anything that businesses themselves can do to try and sort out this mess?
I suspect by now a lot of businesses have become much better at forecasting with their logistics provider, letting them know when orders are expected to be ready, maybe 3, 6, 12 months out, and not letting the tail wag the dog. In the old days, it used to be, we have an order ready, can you now book a container? You obviously can't function like that anymore. You've got to be giving your logistics provider a lot more information. But the other problem I've seen a lot of, Kevin, is that suppliers themselves are greatly affected by absenteeism, a shortage of raw materials, and lead times are now far extended from what they were 2 years ago. So it's all very well to plan, but that will also affect how successful you are. I also think scale, as I said earlier on, does matter. If you're a big importer like the Warehouse or a Briscoes, yes, you can affect what happens in your supply chain. But if, like a lot of New Zealand businesses, you're a SME, you've got a lot less ability to do that.
Yeah. So just on that topic, is there anything that you think a lot of the smaller businesses might do differently to almost bring themselves up the pecking order compared to the big boys?
I've been asked that question by a number of people around collaboration, buying groups, things like that, perhaps to increase volume and therefore have a bigger sway with the lines. I think right now, with demand exceeding supply so significantly, it probably wouldn't make a lot of difference. I think there are some practical things, such as ordering more stock, holding more stock. I mean, in the old days, it used to be cash is king. Now stock is king. I'm sure most of your members are seeing that already. Those are sorts of things that they can do themselves. But when it comes to sea freight shipping in particular, you are so affected by poor schedule reliability. I think it sits under 18% currently, and things that are outside your control. The very poorly used term force majeure for port calls in Northport or Tauranga, a thing that even the most astute importer wouldn't have any control over.
Okay, thank you. There's a question coming to the Q&A. Just interested in your views on recent changes to petroleum importing into New Zealand.
Yeah, I've got to say, I'm not a super expert on petroleum importing in here in regards to how it affects pricing for us and those sorts of things. However, I would have thought if you're relying on one source only, it is problematic down the track. In terms of the greening of the supply chain, which is another topic for when this is finally behind us, there's a lot of moves in there as well, of course, around biofuels for shipping lines, what airlines can do to offset their carbon footprint and those sorts of things. Probably a discussion for another time, but it will have an impact on the bottom line because those things are costly as well. So, yeah.
Okay, thanks, Chris. Just looking at the increased costs that most importers, exporters are now facing through no fault of their own, is there anything that they can do around claiming against the shipping lines or any of the port if goods are diverted and they therefore then have to face the additional transport costs of getting their goods from Northland, for example, back to Auckland?
Yes, there absolutely is. What you need to do, though, is be very proactive around your approach with the shipping company that you're working with and your preparedness to take it as far as disputes tribunal and those sorts of things. So over the last 2 years, I've been involved in a number of cases for clients and members' clients around unreasonable detention practice, around lack of notification of port calls and those sorts of things, and what really is force majeure versus frustration of contract. Now, I'm not a lawyer, but we have had some success in that area. But what you need to be doing is proactively saying to the shipping companies that you're dealing with what you will and won't accept as fair and reasonable. Because ultimately, at the disputes tribunal, it is about being fair and reasonable. And I can tell you that a number of people we've been involved in have seen claims being successfully paid out on unfair or unreasonable detention practice, which I think is what your members are seeing the most of. Let me give you a brief example of that. The vessels that are calling Northport, they take somewhere between 7 to 10 days to get those containers available, and there's not a very electronic system behind that. Now, that can often lead to detention before you've even received the container, or being in a situation where you're going to get detention on the day you receive it, which is unfair and unreasonable. If you've said to the shipping line ahead of time, we will not accept detention in a situation where that occurs, you at least have a document you can fall back on if you decide to go to disputes and dispute that. And that's advice you can get from a number of maritime lawyers I can refer members to. If you don't do any of that and just refuse to pay the bill, you then fall into things like lien law and holding shipments back and things like that, which no one benefits from and ultimately is a long, arduous process. So a long answer to a short question, there are things you can do, but you must be proactive and prepared to engage at the beginning of the process to get a better outcome.
Thanks, Chris. Something else that's come through. We've seen throughout the pandemic, the government have offered financial support for employers around wage subsidies, COVID resurgence payments, things like that. Within your conversations with ministers, has there been any thought, or is there likely to be any thought in the future, to the government actually subsidising exporters and importers to help them with these additional costs that they're now facing?
That's an excellent question, and I think there's probably two parts to my answer, if I can. The government would argue that they've been supporting export and import air freight through that MIAC system, where they have spent many hundreds of millions making sure that the air freight channels remain open. It hasn't really achieved what it's set out to do in terms of costs, because costs are still high, but it has kept airlines flying in and out of New Zealand, or perhaps more correctly, a select group of airlines. Where I think the government has tried to let the market fix, which I think is the wrong approach from my personal view, is around the sea freight supply chain, export and import. I mean, I've been involved in some NZTE roadshows of late, and they're trying to encourage New Zealand business to market their clever high IP products overseas. That's fine, but how do you get them to market? And I think that's something that perhaps hasn't been thought through that clearly. I mean, the bigger question is, what could they do to affect prices, schedule reliability, and capacity? That's a much more difficult question. In Australia, for example, there is legislation around a minimum service standard that lines must provide, how many exports they must take out rather than empty containers. It's a whole lot of government work that's been done there over the years. Here in New Zealand, we lag behind, in my view, on that. I think what government really needs to do, or perhaps even better, an independent council, is think about supply chain for New Zealand for the benefit of New Zealand Inc. in total, not just for a period of time, and see what that looks like over the next 20 years. Otherwise, as we've discovered, when pressure comes on like it has now, or there's a huge disruption, you don't have many answers or many levers you can pull. And I think particularly in the sea freight supply chain, we've seen that.
Thanks, Chris. A couple of questions coming in the Q&A. First one, our companies supply product into the New Zealand market from Russia. The product is sold into essential industries, the electricity industry. Do you think the government will impose tariff constraints on Russian products or block the product totally?
It's an interesting question. I've got the same in reverse, actually. Would you believe, without giving too much away, we do some significant exports to Russia and the Ukraine for a particular customer, and we're having all sorts of problems getting that to destination, not because of the law, but because of the invisible embargoes that exist. Focusing back on the importing of Russian product, I think public pressure will likely bear on the government as the days go on to impose more rigid sanctions. Again, in my view, that we've got some of the lowest sanction levels in the world compared to other players. I guess there's a degree of inevitability that would come in. Tariffs, I'm not sure about, because the majority of products coming into New Zealand are duty-free anyway, in the main, with a few exceptions. Could there be an anti-dumping duty or something of that ilk? I'm not sure. What I am seeing, though, is I've got a lot of inquiries from cargo that to me appears to be originating in Russia, but say being picked up in Romania or somewhere else like that, to perhaps get around some of these issues. I guess a lot of it will come down to government policy.
Thanks, Chris. And you alluded to this a little bit earlier. So China is experiencing some regional COVID lockdowns. What are the key regions being impacted? And could you maybe sort of expand a little bit on the overall impacts you think on what's happening in China?
Yeah, we've got an office in Shanghai of our own, and I guess just speaking to the staff there, there's a few things going on. In terms of regions, it's so hard to predict which region gets shut down. So Shenzhen was a few weeks ago. You had Ningbo partly prior to that. Now you've got 23 million odd people in Shanghai as well. As a logistics provider, some of us are immune in part to that, because often when there are lockdowns, freight aircraft will still fly. And up until recently, that was the case from Shanghai. Where the problems exist is around things like truck drivers and picking up stock from suppliers, even if they happen to be ready. Right now, that's very, very difficult to do in that Shanghai area. The Chinese government view, it seems to me, is that it's much better to have shortish lockdowns than have the whole population infected and no one able to work for weeks. I'm not sure if that's true, and I think there's increasing pressure coming on this zero tolerance policy from both Chinese business and international business to perhaps review how that's being implemented. But as you probably heard in the news, and we're seeing in our own office, that looks like it's going to get extended right up potentially to the end of April in Shanghai, which will be very difficult. And it just means, again, that ships will blank those ports probably, airlines will stop flying, and manufacturers will stop making product because they can't get their staff into factories. I mean, we saw the same thing in Vietnam maybe 6 months back as well. So yeah, it's going to be a significant issue the longer it rolls on.
Okay, terrific, thank you. Again, a number of our members deal with Australia. Are there any particular pain points in import and export to Australia at the moment, or are they just generally under the issues that you've already discussed?
I think a couple of things about Australia. I think if I was looking at the biggest risk in Australia for the next 12 months, it would be industrial action. They've just settled an agreement with Patrick's, which run one of the ports over there. But the labour unions, in Australia are very strong, and also the tug unions. So everything to do with maritime. Already there's been industrial disruption in the past 12 months. I could expect some more to come. But also the costs in Australia are ratcheting up fairly quickly as well. You've got what they call an infrastructure surcharge now at Sydney and Melbourne. That's about $200 a container on top of port costs and those sorts of things. That also flows down the supply chain. And if you're exporting to Australia or importing from, you'll see those costs start to increase as well. There's a strange phenomenon going from the USA as well, where a lot of those West Coast vessels, when they finally depart the USA, are now going to Australia as their transship hub rather than coming to New Zealand. That is also leading to further delays. And adding more bad luck onto that, some of those vessels are also calling Northport rather than Auckland, adding further cost and delay to your goods coming in from the States. So I actually personally think Australia play a big part in our future if the two countries could get together and view the supply chain as one. I can see a model coming one day where you are hubbing smaller vessels from New Zealand, potentially New Zealand owned, to a big port on the east coast of Australia, bringing back containers almost like a taxi service, rather than waiting on big international vessels coming to and from New Zealand. Because by the time they get here, their schedule, at the moment at least, is disrupted, and it affects how they deliver their cargo around the country.
Terrific, thanks, Chris. There's no other questions coming through at the moment, so I'm taking from that the information or points that you've discussed have just about covered everything that people wanted to maybe understand more about or identify. So on behalf of everyone that's joined us today and Business North Harbour, really thank you very much indeed for giving up your time today to support the members. Just before we disappear, and I thank you finally, again, thanks to everyone who's joined us online today. I sincerely hope that the information you've been given has been useful and has given you some hope for certainly for the medium and long term. Love to see you all online again. Next week, we're looking at compliance and employment law, and that's with Bronwyn Newcomb from Davenport Law. In the meantime, finally, Chris, a huge thank you to yourself. It's been a pleasure. Good luck with any future advocacy that you're doing, and we really appreciate your time today. So
thank you.
Thank you. I'll now bring everything to a close and wish everyone well moving forward. Thanks very much indeed to everyone. And
thank you very much. Bye-bye.